If they sell undeliverable futures contracts to try and cap gold into this unfactored swap of dollars for gold, the COMEX will be drained of all its leverage NSFR compliant bullion through the EFP conduit.
Andrew Maguire discusses the central bank's sovereign physical demand and its effect on the gold market. He talks about the stair-step support level and how it was guaranteed to hold due to the central bank sovereign bids that were sitting there to be hit.
Andrew, last time that we spoke 2 weeks ago on this episode, you drew attention to the central bank sovereign physical demand. And as you put it, you were saying it was raising the physical support stair-step and enabled you to confirm that the last stair step here was 1820. So that was guaranteed to hold, which it did, of course. Can you update us on where are we on this stair step?
Yeah, really happy to share this, Shane. This is unfolding as we speak. And as we discussed in our last episode, following, and bear in mind, that was a $200 higher central bank physical support stair step, which had risen from the November 2022 lows. And that was cemented, as we said, at 1820. We said that live. Now, which, as we recorded last episode, that was hard tested as we recorded it by officials. We knew then, though, that it would hold. And it was going to, because it was going to trigger the central bank sovereign bids we reported were sitting there to be hit. And they were hit, forcing insiders to scramble to short cover, which is why that level held. Now, if 1900 now becomes underpinned by these same central bank sovereign demands over $80 higher than was evidenced into the March 18th lows, then we should expect the all-time 2019 level to be hard tested. Now, being proven as the fresh competing central bank sovereign physical aggregated support level, looking ahead, footprints now suggest that somewhere between 1900 and 1920 level is now beginning to be underpinned by these same competing central bank sovereign buyers, which would be at least $80 higher than was evidenced into the March 8th lows. Just 2 weeks ago, that was. Now, actually, backfilling to this level would actually wipe out all the fickle money with all the remaining paper market interest, because what is left is going to be very long-term and sticky. And we've spoken to some CTAs who are just piling in and saying, no, we need to hedge this exposure. So they won't be rinsed. And so this stair-step support rally point indicates we should expect the all 2019 April 2020 highs from the last March 2020 banking crisis to be hard tested and blown right through.
Andrew Maguire talks about the gold revaluation process and how it's likely to roll out medium term. He also discusses the liquidity providers' actions for their first-year clients, sovereigns, and central banks as we head into the end of this quarter.
This is the most significant bullish for gold development since the long-term capital situation blew up over 20 years ago when gold was at $250, triggering what is now referred to as Brown's bottom. Now, we covered looking into this chasm statement by the Bank of England Governor Eddie George in a recent episode that we did. But here we are again, dancing over a papered over much larger $1 quadrillion derivative chasm, exposing a far worse crisis, and gold will once again be the benefactor. Obviously, the global bailout of the banking crisis, albeit being glossed over, has accelerated the gold revaluation process. And with this in mind, we'll start by looking at what we see the liquidity providers are doing for their first-tier clients, sovereigns and central banks, as we head into the end of this quarter, and how they're positioning for the second quarter, which is really important under this smoke and mirrors, ridiculous, counterintuitive paper action. Now, we will look at the very short-term picture shortly, because that's important too. But let's look at what's on the front burner, involving where the medium and long-term money is actively positioning. And really, and the perfect storm, really, of the banking crisis, if we put that aside, in the bigger picture, This is actually all about positioning for an acceleration of the de-dollarizing process, which
Andrew Maguire talks about the meeting between President Xi Jinping and President Putin in Russia. The agenda of the meeting is officially China's proposed peace settlement for what both nations assess as a proxy war between the U.S. and Russia. However, the real purpose of the meeting is to cement alliances to hedge against an increasingly confrontational U.S. military complex.
as we're going to outline, steps up significantly following this week's meeting between President Xi Jinping and President Putin in Russia. Now, what is officially on the agenda is China's proposed peace settlement for what both nations assess as a proxy war between the US and Russia. However, it is realized any such proposal is extremely unlikely to be adopted by Zelensky's US handlers. However, our well-connected Russian wholesale gold market contacts tell us this meeting is actually primarily focused on cementing alliances to hedge against an increasingly confrontational US military complex. It's worth drilling down a bit here because this is pivotal. This is historic. Following Xi's re-election and with a fresh mandate to bolster alliances with Russia, this has been the first opportunity for China's president to meet with Putin to crystallize and restructure what is currently informal financial and military alliances with Russia. In other words, regardless of the outcome of the peace settlement being agreed or not, the geoeconomics of multipolarity is just moved onto the front burner in serious form.
Andrew Maguire talks about how China is openly preparing for war and has appointed its war cabinet in response to U.S. military officials openly discussing their plans for a future war with China. China is mobilizing the civilian population for war and implementing the largest military buildup since the Second World War.
I just have to make this statement. We are not taking sides with Russia, China, Ukraine, or anyone. We're simply providing an informed insight beneath the PSYOPs narrative into why and how gold will be revalued in dollar terms and what is actually accelerating that process. This is a focus on how, following weaponization of the dollar and following the Afghanistan debacle, a weakened, overstretched, woke US military headed by the most woke US president in history, how it's being perceived, meaning the dollar has become a toxic asset for 2/3 of the globe, and the anti-dollar is weaponized physical gold. It's that simple. Russia has openly expressed its view that the US interference in Chinese internal affairs are unacceptable. And in particular, obviously that's in regard to Taiwan sovereignty. And as Voice of America, I think here, I've got it here, Voice of America, what they reported last week was that China's growing pessimism over its relationship with the US is making Beijing prepare for a future war it would rather not fight. Well, while it's true that China is not seeking war, the US is openly ramping up its overall military presence in the Asia Pacific. So in response, China is openly preparing for a future conflict. Having not ruled out invading Taiwan, but adamant it will defend its sovereign territory in the face of US interference, China is openly preparing for war. And back in October, Chinese President Xi appointed his war cabinet in response to US military officials openly discussing their plans for a future war with China. Are these guys crazy? In indirect response, President Xi has implemented the largest military buildup since the Second World War and is mobilizing the civilian population for war.
Andrew Maguire talks about how China's president is mobilizing the civilian population for war and potentially providing access to the additional over 25,000 tons of gold held by citizens. This could be deployed to sanction-proof his regime for an increasingly weaponized dollar. If the COMEX-centric paper market does not follow the physical price, the COMEX will be drained of all its leverage.
Now, this is interesting because this could mean potentially providing access to the additional over 25,000 tons of gold held by citizens who could be rewarded by participating in a significantly higher gold price. This could be deployed. This means he has to sanction-proof his regime from an increasingly weaponized dollar. So he needs to do this. This process is underway and will place a strong bid under physical gold. And if the COMEX-centric paper market does not follow the physical price, in other words, if they sell undeliverable futures contracts to try and cap gold into this unfactored swap of dollars for gold, the COMEX will be drained of all its leverage NSFR-compliant bullion through the EFP conduit. If you remember, EFP conduit is simply where we have an undeliverable COMEX futures contract that can actually use this particular EFP conduit to move it into the spot markets in the UK, and actually then it becomes forced to be deliverable.